Hello everyone, hope you're all keeping well today. We're sitting about the second last day of the month of 2017. We're still grinding away, getting the videos out. Had an incredible month of trading, but what we're going to be doing in this video is quite an interesting two-part video. So as you do know, we are always uploading our monthly investors reports to YouTube. We basically walk you through what happened the previous month, showing you exactly what we're doing and how we're doing it in terms of trading the financial markets for our investors. But what I'm going to do is make it a bit more educational, specifically because someone's already asked me about some important questions to do with this specific video. So basically what this two-part series is going to be is about the secret to making great quarterly returns. So part one of this video is going to be talking to you about my previous quarter of trading. Part two of this video is going to be giving you the tips and tricks that I've used in the previous quarter that helped me maintain those returns and produce those returns. We're just keeping these in two separate videos, so it's not too long. Let's get into it now. Okay, so just quickly to introduce myself to you, for anyone who is brand new to this channel, my name is Morgan. I'm the founder of MS Equities Trading. What I do is I run an investment research company. I also run an educational academy where I train students in 25 countries around the world. And what I focus on doing is teaching people about trading, investing, and wealth management. But more specifically, I also trade and invest for a private network of clients. Now, for this thing, I almost must make clear to you that I don't actually trade for outside investors. So you can't just come to me and ask me, oh, can you trade? I'm specifically a proprietary trader. I run my own company and I am partnered with other investors and I'm able to manage capital for them. So basically the returns that I've produced are with institutional capital, with investment capital, and it's more specifically focused on showing you exactly how I'm producing these returns. So more specifically, this video is going to be relating to September, October, and November. But now we're already sitting at the end of December and it's been a month late. It's taken me a month to produce this video, more specifically because what happened was I wanted to get third-party verification on my quarterly results. So I brought someone in to sit down, have a look at all of my results, make sure they're perfect, that they're actually verified by someone who's licensed, and I made sure that I got that done. So I just wanted to make sure that the results I'm going to be showing you are actually correct. So we're going to be throwing up a couple slides throughout this video showing you the returns so you can follow along with me. So more specifically, in the previous 3 months, what I've been focusing on doing is trading currencies, commodities, indices, and I've been focusing on employing the same trading strategies that I teach the students in my training academy and I teach on my YouTube channel as well. And I've basically been focusing on things like macroeconomic long-term strategies and then short-term swing trading strategies, getting in and out of these positions quick enough to make sure I'm maintaining the returns, but I'm still maximizing my profits at the same time. So what I'd consider it to be is a low risk, medium return. And more specifically, there's two funds that we're going to be showing you. One fund is an aggressive fund, second fund is a conservative fund. So we'll walk you through that as well. So as you can see, starting off, we're going to be talking about the monthly returns, and these are the returns in November. So as you can see on the slide I've just thrown up, on the monthly returns, we are able to maintain a return of 3.77% in the aggressive fund and 0.97% return in the conservative fund, which is almost exactly what we like to maintain. The aggressive fund, we're usually focusing on about 3.34% per month, which totals about 40% per year return. And the conservative fund, we focus more on about 1.67% per month, which is just above 18% to 20% per year return. For the conservative fund, we're a little bit below, and for the aggressive fund, we're a little bit above. So we are very happy with that. Once again, we were also able to maintain a profitability of over 76%, and we were also able to keep the drawdown ratio below 0.19%, which we're very happy with. The month of November was a very positive month for us where we were able to keep our drawdowns incredibly low and maximize our profitability at the same time. So on the second slide going up now, you can see I've just got a bit of a talk up about the quarterly results for 2017 for between September and November. As you can see, the conservative fund experienced its first quarter of results and the aggressive fund its second quarter of results. So basically we were able to maintain an average profitability over both funds of 80.07% and a maximum drawdown of only 2.31%, which I was very happy with. The maximum drawdown actually came from a hedging position that went slightly wrong in September during the North Korean crisis, but we'll cover that just now as well. So into the next slide, you can see talking about the conservative fund, we've got quite a nice table up there. So you can see the quarterly return for the last 3 months was 2.31%, which was very commendable. The average maximum drawdown was frighteningly low at 0.05%, and the profitability was incredibly high at 84.75%. The profit factor, I was also very happy to say, was a high 11.62. And obviously for the quarterly return goal, we were focusing on something between 3.2 to 3.8% in a quarter. But given that we had such low drawdowns, such low volatility, and such high profitability, it's quite a big payoff. Because the thing is that if we're having slightly lower returns but incredibly low risk, we're still happy because our investor capital is kept incredibly safe. As you can see, also in terms of the standard deviation, we averaged a standard deviation of only 0.25%, which I was very happy with, a lot lower than I expected it to be, and also averaging 0.77% return per month, which I was also very happy with. In terms of the equity return graph, you can see it's pretty much only in an upward direction. That's mainly because the maximum drawdown was only 0.05%. So we're basically sitting either flat or forward on our portfolio throughout the entire quarter. As you can see, the profitability ratio of 11.62 attributed to this incredibly well, and the profitability of 84.75%. Now, 84.75% is rather high. 2016, I averaged about 72% profitability throughout the entire year. And this year, I've been able to push it up to about 84% profitability across the entire year. So I've been very happy with those returns. I think we've just been in a very good market in 2017. So moving on to the aggressive fund, you can see we were able to go above our quarterly returns because 3.34% return per month is our monthly goal, because our quarterly goal is just on about a 10% return per quarter. And you can see this quarter we made 11.5%. So we're above our goal. Our maximum drawdown was 4.57%, which, like I said to you, I explained a little bit just now. Profitability ratio, you can see, is 75%, which is slightly lower, but obviously you're going to see that in a more volatile portfolio. My aggressive portfolio, I tend to hedge the positions a lot more. So some of these positions that I closed out in a loss were obviously pre-determined, but they are still losses that I'm going to take on my book. So I need to make sure I also keep those profitability ratios high when I'm hedging my positions. In terms of the profit factor, you can see that it's 2.35 as well, which I was very happy with. And you can also see that the standard deviation was down to 0.05%, which I was very happy with on the monthly returns. And what this basically means is that the investor consistently month on month is making returns. So it's not like one month they're jumping up 10%, the next month they're down a little bit, the next month they're back up, the next month they flat or just slightly forward in their portfolio. It means that every single month is a very, very consistent and low volatility return parameter, which is actually very interesting because this means that my aggressive fund actually reduced the standard deviation further than my conservative fund, which I thought was pretty interesting to see. As you can see, the equity graph actually gives a pretty good depiction of what the volatility came from that created a 4.52% drawdown. As you can see there, what I basically said was there was some volatility we experienced in September during the North Korean crisis, and there was quite a few things that I had to sort of fast foot my way around to make sure that the hedged positions I already had open on certain opportunities weren't going to land up in some problems. At that time, I was actually shorting the price of gold, which obviously was very difficult because during that North Korean crisis in September, the price of gold shot through the roof because it's a safe haven asset class that a lot of people fled to. A lot of people fled to the Japanese yen and to gold. And ironically, that month, the two things I was trying to short was gold and the Japanese yen. So I was very, very lucky I didn't short the Japanese yen, or else I would have had an even bigger problem in my hands. But I managed to recover it very, very fast. I managed to get straight back into a much higher level of returns and consistently made it all the way through that entire month. So you can see that the 75% profitability could have been a bit higher if we experienced less volatility in the macroeconomics. And the 2.35 profit factor is still commendable, but could have been slightly higher. So basically, another one is my plans for the next quarter. And these are things that I'm going to be open with you about, showing you as an example of the kind of things that you can plan for the next quarter going forwards with your returns. This is a really nice template that you can also make use of to present your returns. Even if it's just your own trading portfolios, you can present these returns to yourself and then put together an actual step-by-step goals process for the next quarter going forward. So some of the goals that I'm going to be focusing on is to stabilize the equity return volatility on the aggressive fund and produce a more stable equity growth curve. The second one is reduce the monthly return percentage standard deviation on the conservative fund, which I feel that I will be able to do. The other one is also increase the monthly percentage returns on the conservative fund because it is a bit lower. I'm focusing on a 1.3% return. So for December, I've already closed off the fund. So just to give you a sneak peek into this month, I managed to return 1.37% this month alone on very low maximal drawdowns. So this month we've hit our target absolutely perfectly. So I'm going to also be very happy to try and hit that next month as well. So the plans that we have set forward already in November are already being implemented and successfully achieved in December already. Another one is to maintain that average 3.34% return on the aggressive fund. And the next one is specifically the profitability ratios. I like to try my best to keep the profitability ratios high. The thing is that if your profit factor is high, your profitability ratio is high, you tend to find that the volatility is a lot lower. So I tend to find when I look at portfolios where the profitability is incredibly low, sometimes I land up seeing that the volatility can be a lot higher. So obviously, depending on the portfolios you're looking at, this can be completely contrarian. But depending on where you're looking, if you're coming from my point of view, how I have a look at portfolios, I tend to find higher profitability ratios work a lot better. And then once again, in conclusion, just saying to my investors, very happy to close off the quarter, looking forward to the next quarter going forward and wishing everyone best for the festive seasons. So basically, that is a step-by-step insight into what my quarterly returns look like. Now, I've been able to produce these quarterly returns consistently for the last 2 to 3 years. So in terms of what I like to do is spend every single quarter finding ways that I can improve my trading, but more specifically, I can improve my reporting. For the thing is, by being able to see where you want to go, you need to look back in the past. And by being able to look at reports like this, I'm able to identify things that I can improve on, things that I can do better, things that I don't need to focus too much on. And the next quarter going forwards, I can improve massively. And doing this video, ironically, a month after this quarterly results have come out, already implementing the goals and the plans that I set forward in December, I've hit every single one of those plans perfectly. And that's also a big step that you'll see going forward into the next quarterly results video. You'll see that we've probably implemented that. And I'll actually go back on the previous video and I'll show you going forward what we're going to do from the previous video. Did we achieve those results? And what do we want to do going forwards as new goals? Because obviously at some point in time, we're going to have goals that we don't necessarily need. You know, if we're making the returns and the volatility is low, we don't need to worry too much about anything else. You know, don't fix what's not broken. But what we're going to be doing in part 2 of this video is we're going to be showing you the exact tips and tricks that I have implemented into my trading every single month that I actually teach my students, but I'm going to be giving them to you as well on the YouTube channel. So the nice thing you can actually do is you can subscribe to the YouTube channel in the bottom right-hand corner of your screen. And what that will do is keep you updated on all the videos coming out. Because in about 1 week's time, I'm going to upload part 2 of this video, which is going to give you a step-by-step process about exactly how I was able to achieve these returns. And you can at least get a bit more of an insight into how you can increase your monthly and quarterly returns. Once again, everyone, hope you have a great week of trading and for the festive seasons, and I'll see you in the new year. Cheers for now, everyone.